Okay, there's the back test. We got that going. Yeah, well, this runs. I'll be right back, guys. Just give me 2 minutes. All right, let's see how this is going. So, okay, so I've started 10-year back test. Okay. This version implements exactly what you suggested. It keeps TQQ logic from version 7, but use the idle periods to trade a gap filler gold instead of flipping to SQQ. While that test runs, I performed a deep dive into version 8. Struggled so much between 2016 and 2019 compared to version 7. You're 100% right. The problem wasn't just asset selection, it was a critical flaw in how the bot handled the flip signal. The missing signal bug in version 8. My analysis of the code and trade logs revealed a major logic error in version 8 that caused it to miss the best parts of. Okay, exactly. The return trap. Version 8, the bot detected a bullish trend reversal while holding SQQ. It would sell SQQ and then immediately stop for the day using a return statement. The miss entry because it stopped for the day and never reached the code to buy TQQ. Interesting. By the next day, the bullish was no longer fresh, so the bot would stay in cash. The waiting game bot would then be forced to wait for a bullish BOS to get back into TQQQ. In a steady bull market, it can take weeks or even months for a new BOS to form. The result, this is why you saw not in TQQ during those years, it was essentially locked out of the initial move of every bullish. Okay, so it's like a bug in the code. That makes sense. I fixed this in version 9. No more lockouts when the bot exits the gap asset gold and no longer stops for the day. It immediately checks for TQQ. Perfect. Gold as a parking spot using gold instead of SQQ is a much smarter all-weather move. SQQ is designed for short-term crashes. Holding it during choppy periods of 2016, 2019 was like trying to catch a falling knife with a blindfold on. That's very illustrative. Gold provides a much smoother cushion without the aggressive decay of an inverse leveraged ETF. Okay, well, let's see if you're right. So far, this is looking pretty good. Let's see if we can beat our original. The original did 43% a year or 3,500% total return over a 10-year time period. Very nice. 3,500% and a 30% max drawdown. Let's see if this one beats it. So far, we're off to a good start. Okay, 2020 went through pretty well. Not a big drawdown. Yeah, buying gold when the market's down has actually been historically a pretty good move. Let's see if this actually works out. Pretty flat. We need to beat the 3,500%. We're pretty close. Very close. 3,200. Are we going to beat that 3,500? Oh, 3,700. We're beating it so far. 4,000. Almost 5,000. This is looking quite nice. I think this might be the one, guys. This is even better than the last one. $100,000 into 4.8 million over 10 years. Oh, what the hell? It says a 99% drawdown. That doesn't make any sense. No, there's some sort of weird bug here. This is not a real drawdown. Something weird happened here. Annual return is 36%. How is that possible? Same time period, higher total return, but the annual return was lower? How is that possible? And there's this big drop here. This is obviously some weird gap in the data that we got to look into. I mean, as far as I could tell, this is a better strategy than the other one. But the numbers, there's something wacky with the numbers going on here. I don't understand what it is, but this doesn't make any sense. How is this possible? The other one had a 3,500 total return. This one has a 5,000% total return, but the annual return is lower. There's something weird with the calculations happening. But I do think this is the superior strategy, as far as I can tell. Let me see here. Okay, so the backtest is done for version 9 and it looks quite good. Something is off though. Oh no, wait. This one had 8,000. That's why. Wait, what the hell? Wait, let's start from the beginning. Okay, so we go here. This tear sheet. Oh, that makes sense. Version 7 did not have 3,500% total return. It had 8,000% total return. Why? What? This one's saying 3,500. So that's this one here. That's from 2016. This is from 2013. This is from 2016. 2016. There's something weird going on here with our calculations. So there's something that's not adding up here.